So AMD just hit $278.26.
Yeah, which is incredible.
Right, and it's riding this 12-day winning streak that honestly we haven't seen in the stock since 2005.
It's been over 20 years.
Exactly. But right now, if you look at the technical boards, you've got these extreme overbought signals just flashing bright red everywhere. So we really have to look objectively at what is actually happening here.
We do.
I mean, is this a strong buy that is still somehow fundamentally undervalued? Or, are retail traders just walking straight into a massive value trap right at the absolute peak?
Well, it's arguably the most complex market paradox we are tracking right now.
Oh, for sure.
Because you have this unparalleled institutional momentum, and it's colliding head-on with these gravity-defying technical indicators, and it's all leading up to a really critical deadline.
And that is exactly what we're going to untangle for you today. So for this deep dive, our mission is to just cut right through the headline noise.
Get to the actual data.
Right. We're going to unpack the underlying mechanics of AMD's financials. We'll dissect the specific technical setup and then map out the true bull and bear arguments before their massive earnings call, which is looming on May 5th.
Yeah, because reading the news is easy, right? But understanding what the market is actually pricing into a 105 PE multiple, that's where the real work happens.
Exactly. Real quick, though, before we jump into the numbers, make sure you hit that like button, subscribe to the YouTube channel, and consider this a compulsory mission. You have to leave your feedback and your own price predictions in the comments section below. We want to know what you think.
Absolutely. Let us know.
Okay, so let's start with the catalyst itself, because to figure out if this run is sustainable, we really have to look at the sheer scale of the money moving around right now.
It's staggering.
It really is. So, looking at the latest session, AMD closed at 278.26. That was a 7.8% surge in just a single trading session.
Yeah, nearly 8% in one day for a mega cap is wild.
Right. And looking at the 52-week range, it's rallied from a low of $83.75 all the way to a high of $279.34.
So it's actively testing its all-time highs as we speak.
Exactly. But the metric that immediately jumped off the page to me when I was looking at the data, it was the volume.
The whale activity.
Yeah. The trading volume just hit 64.85 million shares. And the average is what, 33 million?
Yeah, right around 33 million. And, that volume delta, that's the real signal in the noise here.
What do you mean by that?
Well, when you see an extra 31 million shares change hands above the average daily volume, especially at these price levels, you're looking at roughly $8 billion of excess capital entering the stock in a single day.
8 billion.
8 billion. And look, retail traders buying fractional shares on their phones, they do not move $8 billion.
Right, that's not retail.
No, you're watching institutional block trades. It's asset managers, sovereign wealth funds, massive endowments. They're aggressively repositioning their portfolios to gain exposure to this.
And from the source material, it seems like they're positioning around 3 specific kind of overlapping news developments, right?
Yeah, the trifecta.
Right. First, we had TSMC's Q1 guidance, where they explicitly cited, quote, insatiable AI demand.
Huge signal.
Yeah. And then second, AMD just signed a letter of intent with the French government to build an exascale supercomputer.
So it's geopolitically massive.
Exactly. And then third, and I think this is the really massive one, Meta just expanded their partnership with AMD. They are deploying 6 gigawatts of AMD GPUs, heavily relying on those custom MI450-based accelerators.
Yeah, and, each of those data points matters, but they matter for entirely different reasons.
Okay, break that down for me.
So when TSMC, which is the foundry that physically manufactures the silicon for almost everyone.
Right, they make the chips.
Exactly. When they say demand is insatiable, it validates the whole macro environment. It means the entire sector is still expanding.
TSMC is essentially the canary in the coal mine for global chip demand. Like when they say demand is insatiable, the whole sector just lifts.
That's a perfect way to put it. Now, the French exascale supercomputer is a completely different angle. That's a geopolitical angle.
Because exascale means, what, a quintillion calculations per second?
Yeah, a quintillion.
Yeah.
It's incomprehensible speed. And France doing this, it signals a major shift towards sovereign AI. Nations are realizing they just cannot rely solely on American corporate cloud infrastructure anymore.
They need their own national computing iron.
Exactly. They want the hardware on their own soil.
Okay, so I hear you on the geopolitical validation, and obviously the TSMC macro environment is great. But I still struggle to justify, almost 65 million shares changing hands in a single day over this.
You think it's an overreaction?
I mean, we all knew sovereign AI was growing, right? We all knew Meta was diversifying its hardware. A 12-day winning streak that we haven't seen in 2 decades.
It sounds extreme.
It does. It feels less like smart money positioning and more like just pure FOMO. Just a massive institutional overreaction to a partnership we already knew was brewing.
It's valid skepticism. I totally get it.
Uh-huh.
But we really need to look at the mechanics of what 6 gigawatts of compute actually means in the real world.
Okay, put that in perspective for us.
Well, 1 gigawatt is roughly the output of a standard nuclear reactor.
Wait, really? A nuclear reactor?
Yes. So Meta is essentially building 6 nuclear reactors worth of data center compute power.
Wow. That is absurd.
It is. But the reason institutions just piled in wasn't just the sheer size of the energy footprint. It was the architecture they chose.
The custom MI450 silicon.
Exactly. For the last 3 years, the dominant narrative was always that AMD is a really capable backup plan.
Right, like the hopeful alternative. You buy AMD when you can't get your hands on the market leader's chips.
Right. But here's the thing. It's 6 gigawatts. You do not buy backup hardware. You don't scale an inefficient architecture to that size because the power costs alone would literally bankrupt the project. So Meta's decision, it proves that AMD's custom silicon is now a proven necessity at the enterprise level.
They've demonstrated they can actually build bespoke accelerators that match or even beat the competition.
Yes, for specific massive scale workloads, that shift from, being an alternative to being an equal necessity, that is what triggered that $8 billion of institutional buying.
Okay, that makes sense. But Meta's validation is really just a story until we see if AMD can actually monetize it efficiently, right?
Oh, entirely. News doesn't pay the bills.
Exactly. Signing a massive contract is great, but fulfilling it profitably is a completely different beast. So let's transition from the headlines over to the actual balance sheet and see if the company's financial health supports this massive stock run-up.
This is where the rubber meets the road.
So looking at their income statement, comparing fiscal year 2025 to fiscal year 2024, the top-line numbers are very strong. Total revenue exploded 34% to $34.4 billion.
Solid growth.
And gross profit jumped 35% to $17.15 billion. But the jaw dropper for me, it's further down the sheet.
The net income.
Yes. Net income skyrocketed an incredible 164%, up to $4.34 billion, with diluted EPS jumping 165% to $2.65.
It's a massive leap.
But how are they achieving a 164% profit jump on only 34% revenue growth? I mean, that looks like a software company's margin profile, not a hardware manufacturer.
Well, it comes down to operational leverage and a really massive shift in their product mix.
Okay, how so?
Historically, AMD sold a lot of lower margin chips for consumer laptops, gaming consoles, things like that. But right now, their growth is hyper-concentrated in enterprise data center chips. Specifically that MI series we were just talking about.
The AI chips.
Exactly.
Yeah.
And the thing is, the research and development costs for that architecture are largely fixed. So once they cover those base R&D costs, every additional MI450 chip they sell drops almost entirely to the bottom line.
Oh, I see. So the margins just explode.
Right. As their revenue mix shifts heavily toward that high-margin data center silicon, their profit margins expand exponentially relative to their revenue growth.
Which perfectly explains how the balance sheet has turned into such a fortress lately.
It really is a fortress.
Total assets are sitting at $76.93 billion. And of that, $10.57 billion is pure cash and short-term investments.
That's a ton of liquidity.
And then compare that to their liabilities, which are a highly manageable $13.93 billion. And their long-term debt is incredibly light at just $3.85 billion.
Yeah, and having almost 3 times as much cash as long-term debt, especially in a high-interest rate environment, is an incredible strategic moat.
Because they don't have to borrow.
Exactly. It means AMD can self-fund its own hypergrowth. They aren't at the mercy of the debt markets to finance their next-generation chip designs or those custom silicon projects for clients like Meta.
But And I want to push back here for a second. There is a line item in their cash flow that honestly gave me pause.
Okay, what is it?
Well, their operating cash flow is strong. It's at $6.5 billion, and free cash flow is about $6.81 billion for the trailing 12 months.
Right, very healthy.
But inside that operating cash flow calculation, there's an adjustment for a $2.2 billion inventory ramp specifically for AI.
Ah, yes, the inventory build.
Look, in a traditional business, a massive spike in unsold inventory is a flashing red flag. It means products are just sitting on shelves. Are they just hoarding chips hoping the demand stays hot, or is this like a necessary war chest to fulfill that 6 gigawatt Meta deal?
I mean, if this were a retail company selling clothing, I would completely agree it would be a terrifying warning sign.
Right.
But we have to look at the actual mechanics of advanced semiconductor manufacturing. When you're dealing with TSMC foundries at the 3-nanometer scale or using advanced CoWoS packaging, the lead times are incredibly long.
How long are we talking?
We're talking 12 to 18 months from placing an order to actually getting a finished wafer back.
Wow. So you literally can't just ramp up production next week if a huge client calls.
Precisely. When you sign a letter of intent with a sovereign nation like France, or you partner with Meta for 6 gigawatts of infrastructure, those clients will not wait a year and a half for you to start manufacturing.
You want the hardware now.
Right. So that $2.2 billion inventory ramp, that is AMD front-loading the supply chain.
It's a strategic necessity then.
Absolutely. It's a war chest. They are paying for wafer capacity and advanced packaging right now, essentially de-risking their future revenue. They have to ensure they have physical silicon ready to deploy the moment these massive contracts reach the execution phase.
Okay, I get that. So the fundamentals are undeniably pristine. The balance sheet is rock solid. They have immense operational leverage, and their inventory is strategic rather than stagnant.
Structurally, the company's in phenomenal shape.
But as we see constantly in this market, a spectacular company can still be a terrible stock if you buy it at the wrong valuation.
Oh, absolutely. The company and the stock are two entirely different entities, and they play by different rules.
So let's look at the charts and the valuation to see if this is truly undervalued or if it's a classic value trap setting up to crush retail buyers.
Let's do it.
Starting with the technical breakdown. The stock is in a strong bullish trend. It has reclaimed the 50-day simple moving average at $210.57 and the 200-day at $201.74.
Both really solid support levels underneath.
Yeah. Key support right now is at 268, which was the breakout level, and then down at 245. Resistance is that 279.34 all-time high. And the algorithms show that if it breaks through that, it targets the 292 to 326 range.
Which is a massive upside case.
But the warning signs are absolutely screaming.
And this is where the paradox really takes shape.
The RSI, the Relative Strength Index, is sitting at a scorching 91.4.
Which is extreme.
That is extreme overbought. And on top of that, there's a broadening wedge pattern forming on the charts. Now, the MACD does show a bullish crossover at 18.09, which shows upward momentum is accelerating, but man, an RSI of 91.4 is like running a sports car engine in the red line at 9,000 RPMs.
Yeah, eventually something has to cool down or it blows.
Exactly. Yes, it can physically run a little longer, but the underlying tension is dangerous.
Well, the mechanics of technical analysis dictate that a stock cannot defy gravity indefinitely. When you pair that 91.4 RSI with a broadening wedge pattern, the danger just compounds.
Explain the broadening wedge for the listeners.
So a broadening wedge looks like a megaphone. On the chart, you have higher highs and lower lows. Mechanically, it means the trading range is getting wider and wider, which shows that institutional buyers and sellers are violently disagreeing on the fair value of the stock.
Right, it's expanding volatility.
Exactly. And that expanding volatility almost always precedes a massive break, often to the downside, just to clear out all the over-leveraged long positions.
And what about that MACD crossover at 18.09?
Well, a MACD line that high means the short-term price average is pulling away from the long-term average at an incredibly fast rate. The acceleration itself is accelerating.
Which sounds good for a day trader.
It can override the overbought RSI for a short period, sure, which is why the stock keeps squeezing higher. But it makes the eventual cooling off period exponentially more dangerous.
Which brings me to the core valuation debate. Trading at a 105.2 PE multiple, while DCF discounted cash flow models estimate fair value at around $318.80.
That's a massive divergence.
Right. If the DCF says it's still 20% undervalued at 318, but the PE is way over 100, you have a split narrative. But here's the kicker. When I look at the Form 144 filings, I see corporate insiders actively scheduling stock sales right now at these all-time highs.
Ah, the insider selling.
Yeah. So I have to pose a tough question here. If the math says it's going to 318, but the insiders running the company are actively scheduling stock sales right now at 278, aren't retail traders just acting as exit liquidity? Like, is this the exact definition of a value trap?
It's very easy to look at insider selling and assume the executives know the ship is sinking.
Mm.
But we really have to look at how corporate compensation actually works at this level.
Okay, tell me.
Executives at companies like AMD receive massive portions of their compensation in equity, right? So, to avoid SEC scrutiny or any accusations of insider trading, they utilize what are called Rule 10b-5-1 plans.
The automated sales.
Yes, these are pre-scheduled automated sales set up months, sometimes years in advance. It triggers a sale at a certain data price, entirely independent of whatever the current news cycle is.
So they don't even control it day to day.
Right. So insider selling, in a vacuum, isn't inherently a lack of faith in the company. It's often just routine portfolio diversification or covering tax obligations.
Okay, I get that. But combined with the broadening wedge and the 91.4 RSI, you can't ignore the timing.
No, you can't. You're completely right. The insider selling might be routine, but the technical setup is not routine at all. The sheer tension in the chart makes the stock incredibly vulnerable to any negative catalyst.
Which brings us perfectly to the ultimate bull versus bear case. Knowing the technical risks we just covered and the fundamental strengths of the balance sheet, we can finally map out the two divergent paths the stock could take from here.
It really is a crossroads.
So looking at the analyst consensus right now, out of 24 analysts, they rated a strong buy or a buy. The average price target is $292.51, with a high target all the way up at $365.
So the analyst community is clearly heavily weighted toward the structural long-term narrative.
Right. And their bull case, the best case scenario, it hinges heavily on this dominance in the rising agentic AI space.
Which is a fascinating shift.
The argument from the sources is that demand is shifting toward CPU and GPU combos, so EPYC and Ryzen working together to capture massive market share. Projections literally point to a staggering $67 billion in revenue by 2027.
It's a huge number.
It is. But can you break down the mechanics of agentic AI? Like, why does that specific shift favor AMD so heavily?
Sure. So in the current phase of AI, you type a prompt into a cloud-based chatbot. Right. The actual compute happens in a massive data center hundreds of miles away, and then you just get the answer sent back to your screen.
Right. It's all in the cloud.
But agentic AI is fundamentally different. These are AI agents designed to act autonomously on your behalf. They monitor your local workflow, they execute tasks across your actual applications, update your schedule, write emails, manage local files.
Oh, so it's doing things on your actual machine.
Yes. And to do that securely and with zero latency, you need constant, localized background compute. You cannot send every single microaction back to the cloud.
That'd be too slow.
Way too slow. And privacy nightmare. So you need massive local CPU power, which AMD dominates with their EPYC and Ryzen lines working in direct, high-bandwidth tandem with GPU accelerators.
Ah, the combo.
Exactly. Nvidia owns the pure GPU cloud market, absolutely. But AMD's historical dominance in CPUs gives them a unique architectural synergy for local agentic AI. It's incredibly difficult for competitors to replicate that specific combination.
Okay, so a $67 billion revenue forecast by 2027 sounds amazing for the long term, but we have to look at the bear case.
The worst case continuation lower.
Right. And for me, in the short term, the concept of being priced for perfection with that 105 PE multiple, that means hitting a bullseye while blindfolded.
It leaves zero margin for execution errors.
Exactly. So the bear argument here is that the market is setting up for a brutal sell the news event right after the May 5th earnings call. Combined with that broadening wedge pattern, bears are pointing to a harsh short-term retest of the $260 level, or maybe even the $245 support.
It's entirely possible.
So I have to push you on this. If Lisa Su and the team report great earnings on May 5th, but their forward guidance misses the analyst consensus by even a fraction of a percent, does that 260 support level actually hold, or does the floor completely fall out?
And this right here is exactly why retail traders get trapped. You have to separate the company's structural future from the stock's immediate physics. Long term, That shift to agentic AI makes AMD a fundamental powerhouse.
Yeah.
5 years from now, this current price action might just look like a minor little blip on an upward curve.
Right, zooming out.
But in the short term, in the next 30 days, algorithmic trading systems do not care about the exascale supercomputer in France if the Q2 margin guidance drops by 40 basis points.
They will just sell.
Instantly.
Yeah.
The high run-up sentiment, the overbought 91 RSI, the megaphone pattern, they create a literal powder keg. If guidance is even slightly cautious, algorithms will execute ruthless sell programs.
And retail gets caught in the crossfire.
Exactly. Retail sees the 12-day winning streak. They buy at 278 right before earnings expecting a pop, and instead they get caught in a 10 or 15% liquidation cascade back down to 245.
Wow.
The underlying company is totally fine, but the late buyer is left holding a really heavy bag.
Man, let's summarize the intense duality of AMD right now because it is fascinating. On one hand, you have unparalleled fundamentals and massive institutional backing, a pristine balance sheet, a 164% net income growth, and, validation from Meta on a 6-gigawatt scale.
It's a historic turnaround story.
But on the other hand, all of those phenomenal expectations are colliding with a wildly overextended chart, a 91.4 RSI, a broadening wedge, and sky-high expectations that leave absolutely zero room for a single misstep on May 5th.
It's the definition of a high-wire act.
It really is. So we are staring down the barrel of the May 5th earnings. With insiders taking profits and retail jumping in at the highest RSI we've seen in years, you have to ask yourself a final question.
It's a big one.
If AMD's custom MI450 silicon truly becomes the new enterprise standard and their CPU-GPU synergy captures the agentic AI market, are we just witnessing the permanent coronation of a new AI king? Or are we looking at the final euphoric gasp of a rally right before the ultimate sell-the-news plunge, leaving retail holding the bag while institutions rotate out?
It could dictate the entire semiconductor sector for the next year.
It absolutely could. We'll see what happens on May 5th. Thank you so much for joining us on this deep dive. Make sure you hit that like button, subscribe to the YouTube channel, and jump into the comments below. Let us know, are you a buyer or a seller at these levels? What's your price prediction? We want to hear from you. We'll see you in the next one.